Hi, everybody. I'm Bob Bowman, Editor-in-Chief of Supply Chain Brain. Welcome to this special presentation, Moneyball for Supply Chains. Find Hidden Profit Levers, presented by Anaplan. Quick reminder, there will be an audience question and answer session at the end of this presentation. Audience members are encouraged to submit their questions at any time during the presentation by clicking on that Q&A icon at the bottom of your screen. So, how can we uncover hidden profit opportunities and link operational decisions directly to measurable financial impact? Today, we're going to learn how financializing your supply chain transforms day-to-day planning into a strategic, value-generating engine, aligning short-term operational choices with long-term business objectives. You'll discover the secret of how to go beyond reactive planning and harness the full power of financialized decision-making. With that, I want to introduce our speakers for today. Mark Gordon is Senior Director of Supply Chain Solutions with Anaplan. Mark helps companies navigate uncertainty and drive smart, integrated planning. With more than 20 years of experience in demand planning, analytics, and enterprise software, including prior roles at SAS, Oracle, and WePredict. And Ankit Jain is Senior Director of Finance Applications and Center of Excellence at Anaplan. Ankit drives the strategy and growth for the financial applications portfolio and solutions offerings. Prior to joining Anaplan, he spent over 14 years in KPMG's finance transformation consulting practice, advising CFOs and finance teams on process improvement, ERP and EPM system strategy, M&A integrations, and transformation initiatives. Welcome to both of you, Ankit and Mark. And with that, I would now like to pass the presentation on to Mark Gordon. Mark, take it away.
Thanks, Bob. Great to be with you. We talk about this, Ankit and I, all the time about combining supply chain and finance. And the reality is we think they should be combined, but they're not. An example. Let's do a picture. So in a picture, we look at this, typical factory floor, typical operations. What does a supply chain professional see, right? So the supply chain professional is looking at this and they're saying, I've got my handful of metrics here that I'm dealing with on a day in, day out basis. Some of those metrics could be forecast accuracy. It could be attainment, inventory on hand, fill rates, on-time delivery, always a big one. So, of course, we are ingrained and educated and embedded in this philosophy of these are the metrics I need to hit. These are the ones that I need to improve on. That's fine. That's good. That's what they should be doing. And I want to kind of hold that to the side because the same picture now, what does the finance professional see? Again, they're looking at the same organization, the same setup, the same operations, everything else. Yet their metrics are completely different. They don't care about forecast accuracies in and of themselves. They don't care about on time and in full. But the things they care about are more working capital, labor cost, warehousing cost, transportation cost, tariffs are obviously a big one. And so, we kind of use this as an illustration for, look, it literally is the same setup, the same operational setup, but just look through a different lens. And our perspective is that, each one is looking at their view of the world, and yet they have to somehow meet in the middle. So for us, we generally think that all operational decisions really are financial decisions, increasingly so. Tariffs have led the way, obviously, in today's world where now costs are cost and cost uncertainty is on us in a much bigger way. And so our ability to look through our operational decision making with a financial lens is incredibly important. So part of that is understanding the volatility and the risk that occurs on a daily basis, right? So we talked about tariffs. I mentioned that just a second ago. It's the flavor of the day. My perspective, I've go around and talk to a bunch of folks. A handful of people agree with me, some may disagree, and that's totally fine. But whether it's tariffs today, whether it was the Suez Canal shipment disaster, whether it was COVID, um, it's always risk and volatility. That's what we do in the supply chain world is we manage those things. But in order to manage those things, we need to do it in a more connected and more resilient way. And that's what we feel like is kind of the crux of the conversation here. And resilient is both the operational wherewithal to be flexible about that, but to do it in a fiscally responsible way that, always was maybe seen as something secondary that, we think needs to be more prioritized. One of the things to think about when you talk about resiliency, and this was, again, you could hear it from me or from Ankit or from Anaplan, but we also like to use third-party validation for some of this. So this one came from McKinsey, where we talk to folks, and the people that we talk to are very similar in terms of the results here, where um, the question is, how prepared are you or how resilient do you feel? How prepared are you to deal with risk and disruption? And only 13% of folks felt like operationally they were well prepared. Um, I don't know that I love baseball. It is the World Series. I could tell you this, 13% is not good. I watch batting averages, like even the guys that aren't doing so hot are hitting 200 or more. 13% isn't very good. So that to me is kind of the market reacting and saying, look, we need to do better. We have to do better. There's an interesting thing that happened during COVID, for lots of reasons. Not everyone liked COVID. I thought it was really interesting because it shows a lot of the stress and strain on your supply chain. But one of the interesting things from a Gartner study that you'll see here is, look at that bump in 2020, right around COVID time. That's when, remember, baby formula wasn't available on the shelves. That's when diapers weren't available. That's when people were freaking out. And all of a sudden, it's like, hey, supply chain is a strategic role in my organization. Well, unfortunately, that was fairly short-lived, and it lost the points that it gained in 22 and 23 and beyond. Um, I think that was a missed opportunity because then you see, um, if you double click into that yellow line and now you've got the green and the red, you double click and you understand that the higher performing organizations have supply chain functions that CEOs believe are strategic in their companies. And you can see that like dramatically outpacing the laggards, whether it's the all respondent or the laggard. So, again, in our view, one or two things to take away here is number one, we think supply chain is and should be a strategic part of the organization. Two, you have to earn that right. And three, which we'll talk a little bit about, how do you earn that right? You have to start to speak the language a little bit. And that's kind of what we're saying here in this slide, where quite honestly, we're asking supply chain folks, think bigger, think broader, think beyond, go back to the graphic from, early on when you're thinking about just your metrics. We're asking you to think about P&L, understand margins, understand full cost, be a general manager, and understand that. And interestingly enough, the path to being a CEO has come through COO or CSCO. Um, Meaning that C-suite understands exactly what's going on and they value the supply chain. So I think the thing that's hard to reconcile is understanding how big and important supply chain is as some of these executives have grown through the organization, and yet seeing Gartner where, they've kind of reduced it back to a kind of a normal cost center. And again, my assertion, Ankit's assertion is you have to earn that seat at the table, and you do that by speaking the financial language. I don't think a CEO, they don't care about forecast accuracy, but they do care about margin and revenue. And if you're a supply chain professional talking in those terms, you have earned a seat at that table.
Thanks, Mark. It's great to be here and to be able to provide the perspective from finance organizations. So what you're seeing on the page over here is three types of personas you're going to encounter from a finance perspective, right? And each of them have their own worries that keep them up at night. Right? At the top, you have corporate finance. Think of these as finance folks that are supporting your CFO. They live in the world of annual plans, quarterly forecasts, investor calls. They're worried about things like earnings per share. What's the return on invested capital? The big question for them is, will we hit our annual financial targets that we've guided to our board and investors? In the middle, you'll see business finance. Now, these are folks in the finance organization that are closest to you. They're probably supporting a business unit. They're supporting a region, maybe a product line or manufacturing unit. Their job is to be able to translate the CFO's targets into a tangible plan. They're more worried about monthly and quarterly forecasts. And how do you tell the corporate and business unit leaders the performance story of how the business did, right? For example, why is our margin behind forecast this month? What's driving that variance? And how do we get it back on track? And then you have supply chain professionals, a lot of those on the call over here. You're living in the world of how do I manage inventory service levels? How do I have a more accurate forecast? The challenge is that all three of these personas are making decisions that are impacting each other, right? They're often speaking a different language and they're looking at it from a different metrics perspective. So this is probably familiar to a lot of you on the call, the S-Core model. It's a foundational framework. Mark likes to remind me it's the gold standard of how supply chain professionals actually manage their operations. And it's incredibly comprehensive. From a finance lens perspective, I love seeing that cost and profitability have their own sections, but I can imagine it's also overwhelming. Now, you may also think that finance and supply chain leaders live in different worlds, but at the core, you are already focused on the exact same things that finance is worried about. For example, if you're improving on-time delivery, you are directly protecting revenue and customer relationships. Both of those are a top priority for your CFO. They care about that. Now let's take a different look at this. This is how finance is coming at it. Your CFO, your CEO are ultimately accountable for generating a healthy return on invested capital, or ROIC. That's the North Star. But ROIC is a result, right? It's not an action, as you can see. It has two main drivers, right? Profitability and gross margin, that's how much money have we actually made. And capital efficiency, right? How well are we using our money to generate that profit? Now, if you look at the bottom row, this is the supply chain world, right? On the left, under profitability, when you negotiate better procurement costs or optimize manufacturing and logistics, you are directly impacting gross margin. And on the right, under capital efficiency, when you're managing inventory service levels or optimizing warehouse space or deciding on your network footprint, you are directly impacting working capital and fixed assets. Every single one of these operational levers that you pull has a direct impact on the overall company's financial health. The goal is to make it so that the connection is so clear that when you can see the P&L impact before you even make those decisions. And by the way, if you remember that business finance persona and how they have to be able to tell the performance story, your ability to link these operational decisions to the P&L helps them tell that performance story. It actually helps them be able to communicate what that performance story is. Now, let's talk through an example on this. So how do you make that connection a reality, right? So let's just focus on profitability and gross margin. We call this the process of connected planning. And what this diagram is showing is how do we bridge the gap between big picture strategic planning that's happening at the corporate finance level to the day-to-day professional operational actions that you are conducting to manage profitability and gross margin. Now, it really starts with integrated financial planning at the top, at the corporate level. This is where long-range plans are set, near-term targets identified. Oftentimes, this is at a business unit at a high-level product line, and it's focused on revenue and gross margin. It's really just a starting point. It's not really actionable yet. It's not a plan yet. In the bottom row, you see supply chain processes that are being run. These are being done at a very granular level. Maybe you're taking a longer term horizon. Maybe you're looking at it from other dimensions, channels, customers, regions, and you're probably just focused on the top line. Now, these processes have to meet in the middle, and we call this consensus margin planning. This is where the true partnership of supply chain and finance comes together. We can't really develop a realistic margin plan without understanding the demand plan and the revenue growth initiatives that you're seeing on the ground. It's a two-way street. The strategic plan has to be able to inform operations, but also, most importantly, the operational plan with all the realities and the constraints must dynamically inform and adjust the financial strategy. It's a continuous loop, and it's not a one-way top-down mandate. So let's look at this at a little bit more granular level, right? So this is an example again on gross margin KPI. So if you think about how the process would work, it really starts with corporate finance setting an initial top-down target. Let's just say it's a 5% increase in gross margin for the next year. Well, we can't just throw that target over the wall, right? The first question has to come to our supply chain partners as a finance practitioner is based on your view of demand and known operational constraints, what volume growth is actually achievable. This is a really critical bottoms-up reality check that doesn't always happen, but needs to happen. And from there, it's a set of collaborative steps, right? So what price adjustments can we make, can the business make? What innovations or discontinuations are happening in the pipeline that will affect the mix? These all have to be modeled together from a business perspective. Now comes the really powerful part where finance and supply chain can get together and basically define scenarios or lay in strategic financial overlays, right? This could be, as Mark said, a change in tariffs or a spike in material costs. We can run multiple scenarios in real time, and really ask the questions on, hey, what if we expedite shipping to meet a surge in demand? Or how does that impact our margin? What if we shift production from one plant to another? But we can start to see all of these financial trade-offs that are often necessary and sometimes missing from our decisions. And what this really ends up with is a clear view of, price volume mix. It helps everybody understand what's contributing to the performance story, and that we have a consensus plan that is not only financially sound, but just, most importantly, achievable. Now you're looking at this and saying, this all sounds great. It's probably complex to manage, but this is possible because of technology platforms like Anaplan, right? Being able to have a single platform that has supply chain planners and financial planners with a unified experience to be able to support that decision making, being able to have real-time data that allows you to really understand, if the supply chain team updates a volume constraint, what does that mean, from a finance perspective on the gross margin forecast, all in real time. And most importantly, being able to model multiple scenarios more collaboratively is a critical component of this. This really all turns a complex process into a fast, agile, and strategic advantage.
Yeah, I think well said, Ankit, and I appreciate that. It's to be fair, the more we talk to clients, there's a huge mix, right, across the board, a mix of maturities. There are those that want to do some of the things that we're talking about here, but can't because data is not available or whatever the case may be. They have a hard enough time getting their supply chain data updated and accurate. How are we going to marry in all this financial data, and then what do we do with it? So fair enough that the urge is to do it with some of these folks. They just can't quite get there. But then on the other part of it, we do see, again, like we talked about before, some of that siloed thinking and supply chain folks just being in their supply chain world, optimizing their supply chain metrics. Same thing with finance. So as Ankit mentioned, there is no technical limitation anymore. So, that's part of what we're talking about, where sure, there's process work to be done, there's objectives, there's team building to happen, there's understanding and speaking the different languages, but there's no longer a technical limitation. around scenario and planning. And that's where Anaplan comes in. And that's where we feel like we've got, a tremendous enabler for companies that want to get more strategic, more nimble, more agile, et cetera. So we've got about 2,500 customers worldwide. We're over $1 billion. We've invested $500 million in our product, which is nearly unheard of. You could see over in that left area, Anaplan sits in the middle and it literally connects. It is one big, huge calculation engine and model that's connecting finance, HR, sales and marketing, and supply chain. So, the world is available to you to connect all of these components and do a lot of the things that Ankit was talking about in terms of reaching across the aisle, if you will, and being able to connect with folks. So the issue then is like, hey, let's talk a little bit about Anaplan. What is it and what are you likely using today? So again, Anaplan's a huge multidimensional scenario modeling platform. Like it sounds fancy and everything else, but the reality is it's a very broad and deep supply chain solution. It's a very broad and deep financial planning solution. Same thing on HR planning and same things on sales and workforce. So because it all exists in one platform, in one place, and it's homegrown and native, uh, these things are able to be interconnected seamlessly. They're able to be updated on a timely basis, and you can see one impact going to the next. And you're going to see that coming up in a little bit. Whereas the way it exists in today's world, kind of in that right-hand column, is a lot of disconnected, a lot of point solutions, a lot of I need to make an integration from one to another. I've got spreadsheets here. I can't run scenarios there. I sure as heck can't put detailed financial information in to understand what's going on. So, we feel like the technology piece, you know, we've got that. What we need is, the organizations to kind of embed their thinking around this connected nature. One of the views that we'll see is a little bit, how do we get that all on the same page? So here's an example of scenarios, tariffs. We talked a little bit about it before, and I've got a couple of views coming up just so you can see, um, some examples of what kinds of things can and should we be asking for as a company, as a customer. How should we be running our business? So if you cannot model tariffs in a scenario-based way, because they literally change every day, we all know that. Um, this is an example of how that's doable, how you can put tariffs by country and change percentages and what impact does that have, so on and so forth. As we continue to move, you can see different scenarios and compare them like one to the next. Again, whether it's tariffs, whether it's raw material increases, whether it's increased distribution, it doesn't matter what it is, your ability to model a scenario and then over on the right-hand side, look and see what is my net profit out of that scenario. And I like this view because it's a waterfall-based view that's going to tell you and decompose what is the actual impact and the impact by component, and how do I therefore evaluate my scenarios? I think we all know, like, one isn't necessarily better than another, but they achieve different things. So how do we get that visibility? How do we pull that onto a report or a dashboard and understand what that looks like so that our executives can make that decision? Again, we talked early on about having that strategic seat at the table, making sure that you're elevating your conversation and you're doing it through finance language as it relates to executing operational plans. So to be able to put these things together and say, look, here's my fulfillment percentage changes, but then here's what the net gain or loss is. And these kinds of things are the things that we think people need to see, because that's ultimately what's going to help them make the decisions that they need to make. This last one I love. It's a lot, but it's a lot on purpose. And really, part of the takeaway here is being able to understand that, this is not some dollarization of your forecast. It's not, let me take my volume and multiply it by some average selling price and like that's going to get me an accurate revenue plan. I don't think anyone believes that. I think what we believe is that the ability to understand at the granular level, what is my cost? What is my margin? What is my contribution? How does all that work? Lets you go from volume to dollars and back, and understanding this stuff at the very detailed level. Whether you choose to see it or not, a little bit secondary, but knowing that it's there is hugely, hugely impactful for folks being able to make these decisions that we think they need to make in the way that they need to make it. So the handful of takeaways I think from this portion of the presentation is, again, from the supply chain side, and I think Ankit would even say the same thing from the finance side. But from the supply chain side, don't just track your supply chain metrics. We've been doing that forever. Like, that's fine, but really elevate your thinking to the bigger picture and be a general manager, be a business owner. Like, what does it cost you? How do you know that you're investing the money or spending the money wisely when you're making those decisions? The technology is out there to be able to pull all this together. It may not be overnight. Customers are always on a journey. It's one thing, then another, then another. It's Rome was not built in a day. If it was, we probably would have used their contractor. So the reality is you are on a journey, and just pick the best path for you, knowing that it's going to be incremental. And finally, third, and I can't say it enough, you have a right as a supply chain professional to have a seat at that table, but only if you act like it, only if you model it, only if you bring value to that conversation. And the value, I can tell you, is going to be through these financial conversations, these costs, these margins, these revenues, these profits, these investments that we need to make. The executives aren't going to care as much about, hey, our forecast accuracy is up. Like, that's great. That's great for you guys. Go back to the kind of the kids' table over there. We want you, again, to be elevating and making sure that you can highlight the strategic nature of supply chain, why it's so important and why it's so impactful to the business.
Well, thank you so much, Mark. I'd like to bring Ankit back as well for the panel discussion portion of our presentation, in which I have the privilege of asking Mark and Ankit some questions. And then that will be followed by an audience question and answer session. I do encourage audience members to submit their questions at any time during this conversation, and we'll get to as many of your questions as we possibly can, time permitting. But let me start with this one for a question for Mark. Mark, how do you manage agile supply chain planning within a defined monthly FP&A, or financial planning and analysis cycle?
Yeah, it's interesting. It's a good question, right? Because I think, and Ankit can certainly weigh in on this one too. My sense is the monthly FP&A cycle is regimented.
Sure.
It for sure is, let's pull data, let's pull reports, let's check the plan, and let's kind of go through our cadence. Now, in supply chain, we have something similar, right? You've got this monthly S&OP cycle, or this monthly IBP cycle, but the reality is you're almost forced to break that, because I don't know any operational disruption or volatility or uncertainty that's going to wait for a month for you to go and plan that, right? It is going to be on you today, tomorrow, the next day. And so what we think is, quite honestly, like, obviously in supply chain, you build resilience and you build adaptivity into what you're doing. So we're saying we don't want to force supply chain into that monthly cycle. We actually think you can almost be cycle-less, and have financial guardrails that kind of govern what you're doing. And again, through the communication and understanding goals and objectives, you can have these financial guardrails, but you're able to do your detailed kind of reactive and proactive planning as you go. And then again, you need the platform that's going to be able to connect the two, so that when you're making changes almost in real time, you can see that on the financial side, so they can kind of embed that into their normal way of operating.
Yeah. So even though we see S&OP planning cycles or planning horizons shrinking, it seems like you have to go even beyond that to this real-time kind of reaction, capability and agility. So thank you for that, Mark.
Yep.
Ankit, how do you see the relationship between finance and supply chain leaders? How do you see that evolving in the face of these increasing supply chain volatility caused by stuff like tariffs?
That's a really good question, Bob. I think if I just kind of think back about where we were, I think we were always in this kind of siloed kind of nature of kind of planning, right? Finance was doing its own thing, supply chain was doing its own thing. We're seeing that that's getting closer to more of a symbiotic relationship, right? And I think it might have been the last 5 years with all the uncertainty and the importance of supply chain and how that has an impact on financial decisions. The other piece is that we're now starting to see more shared languages, shared platforms, right? We're seeing the importance of supply chain professionals understanding how their decisions impact the P&L, but also the other way, where you have FP&A leaders in your finance organization that are now being pushed to understand the operational drivers of their business. So they're getting closer. Having the same platform and same set of data also helps drive that conversation itself.
Yeah. Mark, what kind of successes have you seen to date from your customers in their efforts to align supply chain and financial decision making?
Yeah, I mean, I think if you go around and you do this as much as we do, I think you get a bunch of customers with their SKU portfolio and there's the long tail and, all these, and SKU rationalization is always a thing. It's always a topic that people talk about. We want to do more, but we can't get to it. We don't know how, et cetera. So I'm actually seeing our customers do it, which is fantastic. It's awesome. So they understand what the profitability is per product. They are able to segment and organize. They are able to, for strategic reasons, maybe you keep some at the long tail, you keep them around, but they understand more fundamentally what does it take to make these products? What does it take to plan them? What does it take to execute them? And really, they're making strategic decisions around the value of having those products in the portfolio. So I think, that's been super cool to see. The other thing that I am, really thrilled with, there's like total cost to serve that we're seeing on a day in, day out. And that includes some of the scenario based and like uncertainty. Like, are you going to really jump through hoops for a customer to prioritize their order and get it to them on time? Like, everyone knows how much it's going to cost maybe to put on a plane versus a boat. But what's the lifetime value of that? What's the total cost of that order? Is it the right thing to do? Should you be prioritizing somebody else's orders instead? And so to see our customers be able to make those decisions quickly without, 3 weeks worth of let me pull data, let me model stuff on spreadsheets, let me try to figure it out. I think it's been super impactful and it's really sped their businesses. And I think our value to them and more importantly, their value to, their customers and to their own financials.
It's a great argument, Mark, for tearing down silos, as you mentioned before, because the whole argument of SKU rationalization versus SKU diversification, which sometimes is driven by marketing, that can be a difficult thing to pull off. But if everybody's on the same page in the same universe, then maybe that can be balanced just perfectly. Okay, so Ankit, give us some recommendations that you have for organizations who are actually looking to implement integrated supply chain and financial planning. Where do they start? What do they do?
So I think number one, I would start with something specific, right? What's the burning platform? What's the high value pain point that you have within the organization, right? I think oftentimes when organizations start to do this, they try to start broad versus kind of identifying a problem that's uniquely felt by both finance and supply chain. So maybe it's margin erosion, maybe it's inventory bloat. But kind of just narrowing it down to a specific business problem can help us build momentum in terms of a quick win. Mm-hmm. This has to also be kind of underpinned by the fact that it focus, has to be on the decision on what actions we can take, right? It's not about building reports, dashboards, and kind of boiling the ocean with all the reporting that you need. And identify what concrete actions need to be taken. And part of that is having a common language. How often is it that we all come to the table with different sources of single versions of the truth, right? So having a common data dictionary, understanding what is the total cost of, the financial impacts of this helps with that. And then I can't underestimate, state the fact that you need a sponsor for this. You need a cross-functional owner at the executive level that will encourage cross-functional collaboration in terms of a top-down mandate as
Who is
well.
that person normally, Ankit? What is the title of that individual who can serve that purpose?
It goes back to kind of the specific high-value pain point, right? So whoever's feeling the biggest pain on that, who's ever kind of pounding the
So it's
table.
not an automatic answer. It's
Yeah,
not
it's not
like
an
it's got to be
automatic
the
answer.
CSCO, it's got to be the CFO, it's got to be this or that.
Yeah,
It could
who's
be,
feeling the pain the most?
yeah,
At what level are they being held accountable for?
depending on your own unique burning platform.
Yeah,
Everyone's platforms are burning. It's just that they're
yeah,
all burning in a different way.
right.
So interesting. Mark, what happens if organizations fail to consider financial implications to supply chain decisions? What risks do they face?
Yeah, I mean, I think it's a little bit of like almost like death by a thousand cuts, right? It's like you're optimizing, you're making like a good decision in the moment. So I'm faced with a problem, I'm making a good decision. I'm faced with another problem, I'm making another good decision. That's fine, but they're not great decisions. And the series of good decisions then leads you to, like Ankit just mentioned, working capital bloat or margin erosion. Because what you see is this cumulative effect of if I can't kind of see end to end and full detail and have the kind of the right full set of metrics that I'm looking at to make the most robust and accurate and good decision, then like again, you're doing fine, but you're not doing well. And so, then what do we see? We see at the end of the year, like, oh, let's do an inventory reduction kind of project, right? Because like our inventory crept up quarter after quarter. Like, oh,
Mhm.
okay. But there were ways to minimize that as you kind of went throughout the year. So I think it's a little bit of that in terms of this misaligned strategy and kind of this growth and death by a thousand cuts if you're not kind of careful and embedding it into your day-to-day operations.
Yeah. But Mark, how should leaders navigate what I guess we can consider to be an inherent trade-off between financial goals, such as minimizing inventory, and operational goals like high customer service levels, and for that matter, also the tension between the finance side, the demand for quick ROIC, and a supply chain need to maybe actually make some upfront investments that are going to, cost you in the short run, materialize somewhere down the, down the path. Tell me how you navigate these apparently conflicting goals.
Yeah, it's not easy, right? I mean, there's always a give and take. Supply chain is I mean, that's what I learned in school, right? There's always buffering and you're buffering uncertainty in supply chain with different things, whether it's lead time or inventory or whatever. It is always a balance. And I'm not here saying at all like there is the perfect answer because there's not. But what there is to kind of your question, there's the ability to make the trade-offs visible and quantifiable and to do that in a robust way, number one, and number two, in kind of a comprehensive and timely way. So, what we've seen is people try to take the initiative to get to understanding these trade-offs in terms of the overall structure and what that looks like and the accuracy of those trade-offs, but it takes them forever to figure that out. And so, we're kind of saying no, like let's kind of put it all in one platform. Let's make it visible. Let's make it quantifiable. Again, like let's get rid of the siloed thinking so that we can now kind of make that balance. We can make a decision here that's going to make the correct set of trade-offs for short-term investment or longer-term profitability or what have you. The other thing that I would tell you is it's like it's all hard, right? It's really hard. Even if you get this right, then all of a sudden you're like, wait a second, the strategy that I have for one channel or one set of customers or one product maybe doesn't fit for the other. And I think there's a kind of a component in there too, which is this one size fits all. Like I don't necessarily know anybody anymore that's got this one size fits all inventory strategy, but I think it's still out there. But that's suboptimal in some way. It's kind of the same thing, right? This kind of one size fits all strategy for our supply chain just doesn't really work anymore. The market's too dynamic, competitors are too fast,
Yeah.
there's too much uncertainty, et cetera. So it really is this, get the structure right, get it good, and then you got to start to chop it into pieces to solve localized problems in a more optimized way in your different segments.
At a higher level, it seems like this is really valuable ammunition or validation for a CEO who's under pressure to show quarterly improvements to get the stock up a little bit every single quarter versus having to make these investments. Here you have validation for the reason you need to be making those types of moves. So that's
That's
great.
right.
Yeah. Oh, Mark, let me just round out our panel discussion with this one final question, and that is your opinion about the single biggest mindset shift that an organization needs to do to move from a cost-centric to a value-centric supply chain.
Yeah. So, a lot of times in supply chain, you're right. It's cost. It's how do I do the same in a lower cost. So whether that's, cheaper production or, cheaper raw material sourcing or whatever the case may be, like it's definitely let's chase at low cost. I think we're at the point where we need to flip that, right? We need to flip that a little bit from cost centric to value centric. How can our supply chain help us win in the market? And I think when you ask questions like that, as opposed to how do we just make things cheaper, you understand that um, there's more of an influence of profitability in there. So you can drive higher profits even at an increased cost. It's possible, right? So you just need to think through how and where are we going to do that. And again, it goes back to what Ankit and I were talking a little bit about before in terms of, kind of return on investment, return on invested capital, like all of these kinds of things where, if you are more valuable as a supply chain organization to your CEO, to your management, to your company, you will be also that much more to the market and you're going to win and you're going to win faster and you're going to win more. And I think it's, again, this mindset of shifting from cost to value.
Okay, great. Thank you so much for that. So let's bring the audience in now for our audience question and answer portion of our presentation. We already have some good audience questions that have come in. Audience members are encouraged to keep on submitting your questions while we're answering these, and we'll get to as many of those as we can, time permitting. So this one is a pretty obvious one. I'm not surprised that it came up, and that is simply, how has your solution been impacted by AI? And what, for that matter, is the role of AI in all of these calculations that we're talking about in integrating finance and supply chain and the whole thing? Who would like to address that? Mark?
I'll take a stab, and then I want Ankit to also
Okay.
answer too. I mean, I think AI is a wonderful thing. I think it's, at its core, it's a kind of it works with the human. It's a decision support tool, technology, et cetera. There's different ways to think about it. AI means different things to different people. And that could be at the data and functional level. So we have embedded some technologies that is looking for data cleanliness and kind of like the MDM, the master data management aspects of data. So we're talking about a lot of data here, financial and supply chain. When it all comes in, how do we clean it? How do we make sure it's right? Like all those kinds of things. So that's happening a little bit at the functional level, at the technical level. And then I think there's things that are happening at the functional level. How do we use AI to see more and elevate things to have us do more? So maybe Ankit can weigh in on that part of it.
Yeah.
Yeah,
Ankit,
so I
what do you
mean,
have to say
I
about that?
think,
Go
yeah,
ahead.
so the way I think of this is that, there's two components of this. One is around efficiency. How can you be more efficient as an organization, as a process? And that's where we're seeing AI play a bigger and bigger role. Mark talked about things like master data, data cleanliness, but also kind of being able to do a lot of the automated reporting that is still necessary, in our processes. Take out kind of often the messy part of our jobs, which is around data wrangling, being able to put reporting together on that. Then there's the component around effectiveness, right? Because I see that as more of a force multiplier for finance and supply chain professionals, right? We're able to now incorporate, external signals, right? Weather data, transportation data, consumer data that would have been very difficult in the past, right? Because it would require a lot more analytical horsepower. But that's only helping us become more effective in terms of our forecast accuracy. And so we're seeing more and more organizations now start to go down that path. There's other components around being able to provide early warnings, right? So anomaly detection, where you're seeing something unusual in your order backlog. What customer is it, right? Or this customer's cost to serve is rapidly increasing over the last 3 quarters. Should we be considering a pricing adjustment? So it's those type of decisions that allows you to kind of really kind of champion.
Okay, thank you. This questioner says, what resources do you recommend to help me increase my financial acumen? Good question, because often supply chain folks don't have that depth of knowledge. It's not in their wheelhouse, this type of detailed financial stuff. So what do you say, Mark?
I mean, it's a good question. I think anywhere to go, I would start internally, quite honestly. Like I feel like there's always the healthy tension between organizations, finance and supply chain. A lot because no one really understands the detail of what the other one is doing and what they're after and what the goals and metrics are. And not to say you need to like go be an expert in the other functional area. That's not what I'm suggesting. What I am saying is like go meet with your counterpart over there that's not in a meeting where you're getting beaten up one way or the other on your revenue plans or what what your profitability is. Go understand what's driving their business. Ask a couple of questions, get to know them in a kind of bigger, better, different way. And also ask them that same question. How do I understand more about my business, my side of it? And I would say that's not only for supply chain folks learning more about finance, I would say vice versa as well. I think it's a two-way street. And I think it's not fair to say supply chain folks go learn a bunch of finance and the finance guys can go stay off on their own on that side. It's got to be both ways.
Finance can be so theoretical, not approached to the real world, which is supply chain.
Right.
So that's great. Top 3 finance KPIs, key performance indicators, that I should care about. Ankit?
So, it wouldn't be a surprise, let's start with gross margin, right? Because every operational decision you're making has a direct impact on this number. So understand what's going into it, right? Understand it'll give, the decisions you're making and how they actually impact gross margin. And it also gives you an indication of the health of your organization. The second one is working capital, what we call cash conversion cycle. If you ask any CFO, they'll say cash is king, right? But the reality on the ground for most finance practitioners and it's still a black box because the biggest component of cash conversion or working capital is inventory. And guess who owns inventory usually? Supply chain organizations, right? So that's an area that you can dramatically make an improvement in your relationship with your finance counterparts and be able to help them think through working capital. The third one is cost to serve. And I think Mark alluded to that earlier. This is becoming an increasingly important topic with CFOs and finance leaders, right? Because there's bloat of SKUs, we've gone through this rapid growth phase, right? Where we've probably not made the best decisions and we need to reevaluate those decisions. But it is an incredibly complex process to be able to identify cost to serve because a lot of those components sit outside of the world of finance, right? So this is an area that you can identify. Again, going back to the earlier question was, if this is a burning platform for the organization, this is your opportunity to engage on those.
Yeah, that's a good one. That last one, it percolates all the way down to the seller when it comes to customer segmentation and things like that. They're becoming much more important now as they truly understand their cost to serve to the extent they do at all.
Yeah.
Okay, Ankit, the question says, I think I'll give this one to you also. What data and information should I bring to cross-functional meetings? We're talking about that to make me a more strategic player?
That's actually a very good question. I say bring scenarios, not plans, because if you're a finance practitioner, oftentimes what you're doing is trying to make trade-offs. You have a limited amount of resources. Where are you going to allocate that money, right? And so what finance teams love is the fact that you're bringing actual scenarios, right? And then they can work with you to identify the impact of those scenarios to the decision that needs to be made. Going back to the black box, right? I've been in conversations where there's a lot of individuals throwing out operational metrics, but oftentimes your finance practitioners lack the understanding of how that metric actually impacts finance. Build that trust by translating operational metrics and how they impact the P&L, right? And the other piece is, at the end of the day, your FP&A analysts are really focused on kind of forward looking, right? They are now worried about the next rolling forecast that they have to submit. So basically help kind of translate the past to the future, right? In terms of where do you see the business moving or the operation moving based on kind of your viewpoints on that?
Great. This questioner says, I get pressure from my marketing and sales teams to execute, execute, execute. How can financial data help me push back, or help push me back on non-profitable or low impact opportunities? Mark?
Yeah. That's a good one, actually, because it's true, right? It's like,
Yeah.
hey, I can meet this. I can take an order. Can you meet that? How many times do we jump through hoops or fight fires to be able to do that? And I think what I want to say is, supply chain again is not like the department of no. It's not no, we can't. And it's not the hero department either. Like I can move around all these things and get it to you, and then you're going to be happy. Like to Ankit's point earlier, like it's trade-offs, and the truth is somewhere in the middle. So, therefore, I don't see how you can have that answer, have that conversation with folks that are yelling at you to execute without saying, this is what it is going to cost for me to do that, both in kind of revenue and profit and cost to serve, the things that Ankit was just talking about. Um, if you are armed, you should be armed with all of that to say, look, I can do X. It is going to come at this cost. Is that worth it? And let's make it a we decision, not a me decision. And I think armed with that information, armed with those trade-offs, and scenarios, like maybe again, like I always tell, my kids, my family, like people want to do option one or option two. There's always an option three or
Mm.
beyond. You just have to be creative enough to go figure that out. So when someone says, I have an order of 50,000 units, like, can you hit that or not? It's not a yes or a no. It's like, look, I think 40,000 would be our better choice for all of the supporting financial reasons that we have. And so I think bringing all that to the table is kind of crucial in the face of the execution question.
I love that idea of bringing that level of creativity into an organization that thinks it's either option one or option two. Think that's a great observation, Mark. So, guys, unfortunately, I have to say, we still have a lot of questions, but we have run pretty much out of time. We have time for just one final question, and I'm going to direct it to Mark. So here it is, Mark. Get ready. What is the most important takeaway from today's discussion? And what is an immediate step our audience can take now to start integrating financial insights into their supply chain decision making?
Yeah, thanks, Bob. I mean, we covered a lot. I think Ankit and I covered a lot. We had a lot of time to spend with everybody, and and I think the thing that I want to sink in for folks is, again, supply chain is not about the Department of No or being the cheapest. It's about being the most valuable. And that is, again, and I've said it a million times, like be a strategic partner, earn that seat at the table. And the way to do that is through these financial oriented conversations. Think like a general manager, think financially, understand trade-offs, all of those kinds of things. And you'll watch that department elevate within the organization. So I think that's the biggest thing that people really need to think about and kind of let that sink in for a little bit and compare that to what your current experience is. And as a result, then what can you do immediately? Like you're not going to go get an MBA, you're not going to go get, your accounting degree, whatever. What you can do is like we talked about, understand what the finance organization's doing, what drives them, what do you need to hit? Ask them questions like, what do you need to see from me? What would make your life better? And they should be asking you those same questions. So I think even starting internally in those communication cycles, breaking down some silos, understanding metrics from the other side would be hugely impactful. And you'd be able to see, a whole lot of increased communication and growth, I think, as a collective organization, not as one department versus another.
It is often said, at the risk of mixing a metaphor, that the supply chain actually is indeed a three-legged stool. The movement of physical product, the accompanying data, and the financial aspect. Now, that last part is very often overlooked or underaddressed, and you guys have gone a long way toward closing that gap today with this great insights into how you can integrate all that together. I want to thank you so much, Mark Gordon and Ankit Jain, for that presentation, as well as our great audience for your sitting in and your excellent questions as well. On behalf of Anaplan and Supply Chain Brain, thank you so much. We do have an asset for you folks, however. This is a white paper that you can download. It's called Financializing Supply Chain Decision Making. If you have your camera, your phone ready, you can take a quick shot of that QR code to access it right now. But if you don't have time in the next few seconds, don't worry about it. This will be sent to all attendees of this webinar upon conclusion, which I have to say is right now. Thanks again, Mark. Thanks, Ankit. Thanks, audience. Everybody, have a great day.